A very good afternoon, ladies and gentlemen. Okay, my name is Jeff. Okay, a brief overview of myself. I'm the director of CFA Society Malaysia. At the same time, I work as a corporate finance M&A consultant in Sadella Advisory, one of the Hong Kong-based M&A firm focused on Southeast Asia, Asia Pacific, as well as Europe and Middle East. Right. Okay, so before proceeding, although today the topic will be on financial modeling, right? So instead of telling you how to be a supermodel, I can given a first very important KPI. Okay, so ladies and gentlemen, before we kickstart everything, can I have all the round of applause for you as one of the wake up or something to kickstart all the sections, please, ladies and gentlemen. Good afternoon. Okay. Okay, thank you so much. Okay, so I believe that I achieved my KPI, right? Okay, so ladies and gentlemen, first of all, what is financial models? So today, of course, I'm not the one should teach you how to become a supermodel in CFA, how to walk the show. Like me, apparently I'm not qualified. But I'm teaching you how, I'm just here to sharing you about what is financial models and how we can achieve how we can help to make our career better. Okay. So of course, financial models is not the tools, It's not like today, tomorrow, lottery open, which number 4D. It's not operate in that way. But it's a tool for you to actually forecast what is the business financial performance into the futures. In short, quantify your decisions, quantify the financial impacts. It's not a crystal ball, right? Or it's not shaking a coconut and tell you it will be fine, but it's a tool to actually estimate that the output given based on a certain assumption. For example, I think my revenue will increase 5%. So what does it include in this 5%, and what it will impact in your bottom line, which is the profits? This will be reflected in your financial model. Okay. So, of course, to use the financial model, right, you don't have to use a very, chunky, very advanced skills, right? You just have to use a very common, which I believe that most of us know how to use. It's called Microsoft Excel, right? So basically, you don't have to do a very complicated function. You don't have to memorize all 800 formulas in the Excel. Just a simple basic function will allow you to do a financial model. Okay, so basically financial models, as I mentioned, they are it's one type of things to forecast your projections based, and typically I would rather call that a very simple basic model, right? It's called three-statement models, right? Three-statement model, sorry, it's not working. Okay, so first, you have an income statement, similar, very exactly like what you learned in our accounting standards. Okay, we have an income statement, we have a balance sheet, we have cash flow statement. Okay, so maybe let me just walk you through what is a financial models. So while this lady is helping us to set out everything, can you go to the input tab first? Okay, so ladies and gentlemen, one important tip for you. Can I understand first, right? Do you think that actually financial models have a lot of format? Anyone? Yes. Okay, ladies and gentlemen, for me, actually, financial model, as long as you hit the objective, as long as you hit the, you make the reader to understand, that's fine. So basically, there are many formats as long as the objective is mixed. Important, highlight, you know what that means, right? Okay. So ladies and gentlemen, okay. So basically, in financial model, they are about, usually they will have one input buttons, okay, here. For you to, key all your assumptions, make all your assumptions, play around with all your assumptions. We got an output button. Output, yes, correct. Okay, output functions for you to show that what is the output, what is the outcome based on your input. Okay, last but not least, Of course, we don't not just do financial model just for the sake of doing. We need to have some objectivity. We need to do valuations, or we need to do sensitivity to test that what will be the impact. So this will be, first one is a DCF based on the output. Next one will be the sensitivity analysis. Okay, so that's why you can see that actually financial model, there are many formats, but before we doing that, we need to know what is the objective. What are the objective, what you want to show. Then we derive from that, Okay, back to the slide, please. Okay, so like I mentioned just now, basic from three fundamental model, three statement model. Okay, we can derive based on I would like to mention it, creativity. Okay, we do models, although it's made of technically also creativity. We can also, use based on DCF doing valuations. We can also do IPO model, impairment models, LBO, merger models. It can be achieved. And of course, for different financial model in the different industry, there are different components. Like for example, construction is you need to know how to do revenue recognitions, right? In e-commerce, you need to know how to P equals to Q. Not just doing that, also you need to factor in the quantity as also the discount applied on it. Renewable energy, you also need to, factor in some of the important factors that, impact due to the ages, right? And etc. Of course, as again, there's always no best practice, only one. As long as you meet the objective, as long as you provide a point of the view that is accurate, fast, robust, and easy to use. Okay, so it means use the best practice. Okay, so always, is financial model, is it very hard or easy? Anyone, can I have, maybe before I disclose the answer, anyone think financial model is hard? Please raise your hand. Okay, anyone thinks it's very easy? Okay, the answer is, rules of thumb, number one, always make your things easy. Okay, we as a financial models, or for someone that construct a financial models, we don't have to do a millions formula, a complicated model just to make our Excel perfect. We just have to achieve the objective. Secondly, we just have to ensure that no mistake. Just now, right? Yeah, no mistakes. We just have to make sure that everyone is clear, that's all. Okay, don't hanky-panky, hold no creativity on the model itself, but it also creates uncertainty on it, correct? Okay, so again, the key principle. Keep it simple and stupid. Okay, not keys on model. Of course, as a trainer, I will always teach you, always love your model, like your sons, like your daughter, like kiss them, but always another meaning means keep it simple and stupid. Okay? Okay, so maybe let me share my journeys on the financial models, right? How I, learn my financial models. I learned my financial model especially during the research challenge, when I was uni time. Then I learned that what is financial model, and that time I didn't know how to do valuations. I didn't know how to do any projections. I just know how to plug and play. I just know how to copy paste. It's not wrong. Actually, it's not wrong to be copy paste, but we have to be smart. And again, we had to know why we want to copy paste, right? So, one of the easier ways for me to do? I take the other models. I learn how. I try to learn how they build the models, because through that process, I can know exactly that how the thought process works, how is the rationale for them, why they want to build in the model in ABCD way, not BACD way. So throughout that, it will be, for you to know how to build a model effectively, Okay, so for you, maybe for someone as a fresh grad, fresh early learner, fresh, right? Just start. How you should start? Okay, basically just start. just start with a blank Excel and work file, because in Malay, it's not like 20 or 30 years ago, we always had limited resources. If you want to go something, you want to go and find a seafood, okay, take a cup and just shout seafood and and they will teach you for over in the next 10 years. Nowadays, we can always get a result with just simple Google. So that's why you can see in a lot of online resources, there are a lot of the financial model actually for you to learn. Some more you can copy paste is a smart way. Sometimes you think that this model, the way they are presenting is very good. Just grab and make it your own model, right? And then again, practice makes perfect. Always make yourself hand dirty and always always practice, to make it perfect. Why I need to mention is because I notice nowadays, once I want to learn financial models, a lot of people like to get model for me. Sometimes, you can see a lot of people posting, I did this model, post it to LinkedIn. Then you see a lot of people comment, please share to me, right? But in fact, the question I actually want to ask is, in fact, those that receive the model, how many actually use the model to be your model itself? When you receive the model, it's their model, not yours. How to make your model yourself is you create yourself using your own from the blank Excel file, right? Because I noticed a very interesting phenomenon. People always like to read the model, not use or do the model. That makes it such a big difference, because without doing a proper one, you don't go through the thought process, you don't go through their rationale why they want to structure in that way, right? Right. So for this one, right? Okay, so basically as part of the CFA Society initiative, right? We want to collect some of the interest if you guys want to have a financial model workshop, which we have done some of them to our YAPIs, the young ambassadors, and to some of the universities. But we also want to check, publicly on the comfortable level on what are the things you're looking for, advanced level, and also workshop as in the price, acceptable price, right? Okay. So lastly, before I, just want to check how many minutes I got. Then if you got any questions, right, please feel free to scan the code, and then we can proceed into Slido, for a Q&A section before, I end my sessions. Okay, thank you. Okay, so I think that's all for my sharing. Before just shoot me with any questions, but please don't ask me how much my salary because I won't answer you. I just had this question last week, okay, by a very interesting university, right? Okay. I think this one we should change to Slido, right? Okay, still nothing show. What are resources? Okay. So to answer the second question first, this is the first question, right? Okay. So what are some of the resources you would recommend for the first-time learners? Okay. For if you had a sufficient budget, you can recommend. You can also CFI is also, I would think, is undeniable a very interesting resources. I will see one of the most structured resources that you can consider. Except that also there are a lot of courses in Udemy. You can also explore that. Otherwise, if you have limited resources, YouTube also have a very good example for you. No? Okay. Okay. Do I know which model to use for different industry? Okay, very simple. From the accounting perspective, you will know, right? Because basically when we are doing financial model for projections, it's basically a three-statement model. Sometimes you don't have to do three-statement model, but sometimes, but in fact you need to project their income. So project their income, project their, performance, basically fall under the accounting standard, right? So basically easy. how you derive the revenue is basically same than how you record the revenue. So basically very similar that you just plug and play on that. At the same time, implant some common sense, which, yes, common sense, with something very important I want to mention, because in the world of financials, where investments, right, everything is about justifications, okay? Justify why you think it's 5%, justify. Why you think they are more than 50 million, justify. And financial model is actually one of the tools to justify this, right? So again, for you to justify, you also need to find some not to say sufficient, reasonableness, have some reasonableness to support your assumptions, right, on that, right? Okay, so I think a lot of questions have been, okay, so maybe I start with number one first, okay, sorry. How can I angle my experience in basic modeling during university to apply into job within corporate finance functions? Okay, basically, very simple, start. I've seen a few students also, okay, before he graduate, he already, can achieve a very good practice, maybe better than some of the senior level, okay, just within few months, because he is very hardworking, he trained, every question he faced, he just asked me. I've seen that also. But for me, that's why I say, modeling is not difficult. It's just that how much effort you want to pay to achieve Excel, right? Okay, what kind of career would CFA, CFRM qualification will add value to? Because, okay, again, I'm representing CFA, so I don't think I need to comment too much on other, okay? But I think, as my CFM journey, the chartered financial models, right, it will be a definitely interesting experience because it tests different things, okay? You learn the thing in the different areas. Again, non-stop learning is a lifelong journey as well, right? Okay, so maybe next, I think the next question, if you have, go to the third one. Okay. Do we have? So I think we just have 1 more minute, so I think you will take as my last questions before, I wrap up my sections. Okay. Okay, can an MMR model can be useful in financial model also? Again, depends of what kind of the difficulty you want to be and what kind of objective you want to achieve. If not, basic Excel will be sufficient. Maybe I take the last one. Do you recommend to have a CA? Sorry. Do you think the process of financial modeling can be automated through digitalizations? This is a very interesting question since I can use this question as one to wrap up, right? So of course, I think a lot of people, keep sharing me after you see, Excel got AI. And Excel can use AI, to do financial models, right? And those campaigning and share to me. Some you just share, people ask me for yam cha and tell me, Jeff, okay, financial modeling useless already, you're going to lose your job, okay? So I can tell you, bro, I won't, okay? Because why? I come in two methods. First, I would think that the implementations of the financial models with AI is still in the early stage. Why? It's because that when you still need someone to build a model, but who will be the one who decide reasonableness of the model? It's you, right? Based on your experience. This kind of thing, AI is unreasonable, Second thing, right? So you know that, your skills might be, difficult. Might as well you should pay more attention, pay more hard work to climb until the management level to make yourself unreplaceable. Because in financial world, there are a lot of skills that can make it critical, because in the investment world, you need to be all-rounder. You not just have to learn about financial model, but it's one of the compulsory. You also need to learn about analyst skills. You have to learn about business acumen. You have to learn about common sense. So again, right? Why I think financial model is very important because it allows you to walk through everything to make you to understand where you're coming from, what's a different angle, so that you can, make your correct decisions. All right, so I think that's all for my sharing. Thank you very much, and over to you.
Thank you very much. Ladies and gentlemen, a round of applause for Jeff Tan. Thank you for kickstarting the afternoon session and sharing with us. Next, we'd like to talk upon the topic of asset valuation. Ladies and gentlemen, let's welcome Rikhai, CFA Vice President of TAEL Partners. Round of applause, please, everybody.
So Warren Buffett once said, price is what you pay, value is what you get. But how do we determine value? So today I'm here to speak to you about asset valuation. Hello everyone, my name is Rikhai. Perhaps before going into asset valuation, let me just share the value of CFA by sharing about my career. So I think it's one of the things that Shini wanted me to talk about is that the fact that I do not have a bachelor's degree. I'm a qualified chartered accountant, and then I did CFA along the way. So I started my career in audit in 2011, which lasted only 5 months before moving into investment bank. I don't know how many of you here is in audit. I work on structuring deals, advising, executing corporate transactions, focusing mainly on M&A and equity-related offerings. It was during this period I was influenced by my peers. Everyone was doing CFA in the investment bank, so I thought I should do it. It was a choice that ultimately opened doors that I never thought possible. And afterward, I transitioned into buy side, specifically into private equity at TAEL Partners, a regional private equity firm focused on growth investments across Southeast Asia. In this role, I was involved in the entire spectrum of private equity, from deal sourcing, due diligence, documentation, post-deal monitoring, and exit planning. Of course, I have to do asset valuation as well. And one of the most memorable experience was in 2016 when the firm decided to look at Myanmar as a market. This was the year after Aung San Suu Kyi's party won the election. So I was perhaps lucky enough to be picked to work alongside the deputy CEO, who is also a CFA charter holder, in originating deals in Myanmar. I guess I don't know when is the next time I can go back to Myanmar, now that they are back under military control. So having spent some time in private equity and recognizing the importance of operational experience in private equity, and of course I was still young, I decided to join Jardine Matheson Group, a Hong Kong-based conglomerate where I supported the senior management team in restructuring work for a struggling subsidiary in Malaysia. My role there was first involved in identifying the challenges, opportunities, and areas for improvement, and then implementing solutions to ensure successful restructuring. My career journey also led me to Astro Overseas Limited, a joint venture between Usaha Tegas, the holding company of Astro and Maxis, and Khazanah Nasional Berhad, the sovereign wealth fund of Malaysia. Astro Overseas Limited is an integrated and diversified media group with a global asset. One of the assets we have was a joint venture with Sir Elton John, where we produced the film Rocketman, which I believe quite many scenes were cut in Malaysia. And before my current role, I was also working in a family office, a private fund backed by one of the conglomerates in Malaysia. And during the pandemic, I returned to TAEL Partners to support investment operation in Indonesia, where I have been based for the last 2 years, which is why I'm in Batik now. I like to think that I was given the role because I was crazy enough to move there in the middle of pandemic. But nevertheless, it was memorable. It was the first time in my life I renewed my passport in 15 minutes. It was in the middle of pandemic. I have to go through many days of quarantine in hotel when I first entered Indonesia. And along the way, I've been working closely with our portfolio companies there to not only survive the pandemic, but to also strive post-pandemic. So with this experience, I would say I have some knowledge of asset valuation, particularly in the context of private equity. So just before me, you heard from Jeff about financial modeling, a vital skill in finance, help us envision potential scenarios. Asset valuation, on the other side, is the foundation that ensures our decisions are rational, well-grounded, and financially sound. Asset valuation is not just a finance concept. It is the cornerstone upon prudent investment choices are constructed. To me, asset valuation is where art and science are beautifully intertwined. Let's start with the science part of asset valuation. The science of asset valuation is characterized by precision and rigorous calculation that underpin our decision. Much like what Jeff showed you earlier, running through Excel, getting to a number. That aspect involves precise and rigorous calculation. We carefully examine financial statements, analyze cash flow. We use systemic methods, financial models to break down past performance and predict future outcomes. Key components include making assumptions about future cash flow and determine appropriate discount rates. We also use statistical analysis to quantify risk, allowing mathematical models to estimate an asset's value. Unlike the precision of the science, the art of asset valuation goes beyond numbers. Here we explore intangible aspects that cannot be easily quantified. For example, your perspective of what constitutes an ideal husband or wife may differ significantly from mine. It simply cannot be easily quantified. However, it's not just a matter of individual perspective, it's about integrating the viewpoints within the broader context of market knowledge and wisdom gained from past experiences. Our successes, failures from the past shape our decision-making process. In private equity, where investments are often held for 3 to 5 years or longer, the art side of asset valuation becomes even more important. Understanding a business narrative, competitive advantage, and its potential is critical and often extends beyond what can be captured by financial metrics or financial statement alone. It is about recognizing the fine details that may not appear in spreadsheets, but can profoundly impact a company's future. In essence, the science ensures our calculations are precise, and the art helps us place those calculations in a broader context of real world. So when we talk about asset valuation, it's not just a matter of crunching numbers, it's a dynamic interplay between the precision of science and the creativity of art. So why does asset valuation play such an important role in finance and investment? Asset valuation is like having a map. It helps you make intelligent decisions, amidst all the complexities. But without accurate information, it is like stumbling in the dark, making choices that are more likely educated guesses than informed decision. And when valuation goes wrong, the consequences can be significant. Imagine thinking something is worth more than it is and investing heavily in it, only to find out it is not as valuable as you thought. That can lead to financial setbacks. On the flip side, undervaluing an asset is equally problematic. You might miss out on the good investment opportunities because you did not realize its potential. As Buffett once said in the 21 shareholders meeting at Berkshire, the mistakes that have been most extreme in Berkshire's history are mistakes of omission. They don't show up in our figures, they show up in opportunity costs. But asset valuation isn't just about making money. It is also crucial to managing risk, which I'll cover later. In short, the importance of asset valuation is not limited to the pursuit of profit. It extends to the protection of wealth and mitigation of risk. It is the difference between making decisions in the dark and clearly understand what you are facing. Next, I will talk a bit about key valuation methods within private equity context, which I'm familiar with. First, market-based valuation, where we often look at two main methods: comparable company analysis and comparable transaction analysis, where we look at similar companies or transactions in the market to understand how a company might be worth based on what a similar companies or transaction are valued. So for example, if you want to look at the value of Coca-Cola, we may look at similar publicly traded beverage companies such as Pepsi, Monster Beverage. We look at the key financial metrics, and then from there we can estimate the value of Coca-Cola. Of course, we can also use income-based, which what Jeff has shown earlier, a DCF method, which is about estimating the value of an asset based on predicting how much cash flow it can generate in the future and adjusting to today's value, right? And we, of course, also can look at asset-based valuation, where essentially is looking at what is the net worth, taking all the value of the asset less the liabilities. And so these are essentially the key financial asset valuation methods that we use in private equity. And I also touch a bit on asset valuation in Southeast Asia. I think in Southeast Asia comes with its own challenges. Southeast Asia is diverse and dynamic region with various economic conditions, and some of the challenges include lack of transparency. I think for myself, for instance, in Indonesia, it's a lot harder to get reliable information as compared to in Malaysia or in Singapore, which can make valuing assets difficult. Diverse accounting standards. Some countries in Southeast Asia uses IFRS. Some have their own accounting standards. So this leads to differences, how financial statements are prepared and presented, impacting the consistency and comparability of asset valuations, right? And I will touch briefly on how asset valuation also play a crucial role in risk assessment, in finance and investment. I think the first of all is risk identification. The valuation process itself may uncover discrepancy, inconsistency, or uncertainties within the financial data, and this will serve as red flags for potential operational or financial risk. It helps us understand the asset condition better. Risk mitigation as well. I think as private equity investor, we often seek to mitigate risk by structuring our investment to protect our capital. I think asset valuation helps us negotiate favorable deal terms, including pricing, debt covenants, and ownership stakes. A proper valuation can also guide us to use risk management strategies such as hedging or diversification to safeguard the investment. Of course, asset valuation is also very important from an exit strategy standpoint. We don't hold our investment forever. So at some point we have to exit. So accurate asset valuation is crucial in negotiating exit prices, right? So to sum it up, everything we do in finance or for that matter in life is based on some risk versus reward calculation, and it's often not something that can be avoided. It's something that we need to understand, analyze, and work with. Asset valuation is not just about numbers. It plays a pivotal role in our investment decision-making process. Lastly, just to meet my KPI, I just want to share that I think CFA has been instrumental in my professional growth, expanding my network, and propelling my career trajectory in the investment industry. It is more than just education. It is also a platform that fuels continuous learning, fosters meaningful connections, and opens the door to endless opportunities. Thank you. Over to you.
Thank you very, very much. Lok Rikhai, ladies and gentlemen, I'm very, very sorry, Rikhai, we're running short of time. I'm sure you have a lot more to share with us, yeah? Moving on, ladies and gentlemen, let's move on to our next speaker. Come on, and can we give Rikhai another round of applause, please, for joining us here this afternoon. Thank you very much, sir. Our next speaker, ladies and gentlemen, let us now welcome Charlie Yuan Ting Jing, CFA, co-founder and chief operating officer of TAEL Optimus, with a topic on Python. Let's give him a round of applause, everybody. Come on.
How many of you love the financial market? Please raise up your hand if you love the financial market. Okay, I see some hands. Good, good, good. How many of you love to be efficient and maybe automate the repetitive tasks? How many of you love to be efficient? Please raise up your hand. Okay, I see a lot of hands as well. How many of you want to apply this efficiency in your finance world? Raise up your hand. Okay, good. You guys are in the right room because today I'll be covering Python, which you can apply. When you apply Python in any domain, you can automate the repetitive tasks and then make it faster and also more efficient in your work. Okay. So today I'll be covering 3 pillars. One is me, myself, my journey with CFA, and also my journey with Python. And then I'll be covering CFA, how CFA link Python and myself, and lastly, Python. So Python, for me, previously Jeff mentioned that you don't really need the automation when you are applying for the financial modeling. My take is actually level 1, if you want to use software, level 1 is obviously is Excel, because in Excel you can actually customize a lot of your tasks, and to be able to be customized, Excel works best. But when it comes to more repetitive tasks, like for example, you have some data that you can take online, you don't really want to visit the website every time you want the data, but you want the data automatically available in your PC, then Python will work for you. And lastly, of course, if your model is very efficient and you want to make it into a website, all those, then there's even more efficient language for you. So Python is more like in between Excel and also the more efficient language like C++ or C#, all those. So today, I'm not here to teach you how to be a Python specialist. However, I will be inspiring you why you should take up Python so that when you are when you are going through the capital market, you can be more efficient and stand out from the crowd. Because most people are still new to Python, and Python is still maybe quite challenging for most of the people. However, if you have the courage and make it through, then obviously you can actually be better than your peers in terms of automating the more repetitive tasks. So this was me taking my CFA. And yeah, so for me, I would say all these photos are actually from my Instagram. So I took some photos, so CFA and me. And at that time, for me, when I received my CFA, it was actually a pandemic. So it was a very one-of-a-kind experience for me. So I actually go through a drive-through and receive my cert and all those. And yeah, it was it's a very happy moment, and it's a moment I cherish for the rest of my life. And about Python and me, so before I start my company, because currently I'm in a startup company, I'm the operating officer of the company, and then we also develop a lot of new tasks and develop a lot of automating a lot of different kind of program. So before I start my company, I actually use Python to develop a lot of projects. So here are some of the projects that I can show you, which may inspire you to dive into Python as well. So for example, the first one is this is extraction of money production figure from Bursa announcement. So this one is about regex. Regex is actually a way you can extract information from structured table. So all of you know that in the Bursa Malaysia announcement, there are a lot of repetitive tasks. For example, money production of a company. You only want the figure to predict the production of, let's say, palm oil or any other commodities. So you can actually use Python to extract all those data and make the data available in your PC directly. So there's actually a way. Another project is called NLP, the middle part. So this NLP is actually asking your PC or your computer to actually understand what are you reading. So for example, you want to extract certain information out of the news, because there's a lot of news, there's 100,000 of news every day, but you only want the most quality and most efficient way to read the news. So how you can beat the rest? You can actually use Python to actually automate and find some information that works for you. For example, let's say there's a merger and acquisition happening between companies, then you can actually extract all this information so that you do know that the top news and the most important news that may affect your portfolio can be seen and also can be analyzed by you. So previously, there may be thousands of news that you need to go through every day. But with Python, you can actually extract those news that are relevant to a portfolio and also relevant to your portfolio mostly. And with that, you can actually really free up your time and make the most use of your time in all this reading of the news. And of course, by Python, we actually do a lot of backtesting. So what is backtesting? Backtesting means that we are using historical data to forecast when this event happens, what will happen in the future. So backtesting is using past data to predict the future. So by using Python, and this is more towards trading on the right side. The left side and the center one is more towards investing. So Python can work for both trading and investment. And by trading, you need to actually test your strategy. So by automating the backtesting part, you can actually ensure that your strategy is working, and also you can earn money. So that is also, you can apply Python in this stuff. And Python and me. So Python is not just about automation. It's also about AI. And by applying AI, we actually have showcased some AI prototype in our previous work. For example, the middle one, my company was the champion of InvestHack 2020. So we actually produced a model that can predict what stock will crash because there's too many people inside. How many of you invest in the stock market? Can you raise your hand? Invest in the stock market, okay? So those that invest in the stock market, obviously you do not want to buy at the top, because when you buy at the top, your stock will crash later, right? So by using Python and also this model, we actually predict what stock will subsequently crash because too many people are discussing about that stock. So that's a very good use case of Python. And also asking Python to define uptrend, this is more for trading. And also, you can also use AI to predict what stocks that will be going up. That's called price prediction model. So from here, was from my Insta. So I actually, that time predicted 2 stocks that will go up. And then subsequently, both stocks perform which succeed 5% increase in price. So this is called price prediction. You predict that the company, which company will rise more than 5% the next day. So these are some use cases. And CFA and Python. So for now, from 2024 onwards, Python financial modeling will be part of CFA. So level 1, level 2 is like, it's like a test. It's not exam-based, but you can go through some learning materials to learn more about all this. So by picking Python, you can go through some videos, but it's not exam-based. That means that you are not tested. You need to do some tests, but it's not like very strictly. You need to actually pass a certain mark. So by going through this Python, you can actually learn through CFA, and then you can actually make sure that all these tasks you can automate your tasks in your life. And previously, I also talked about Python workshop with CFA. And if you want to get the slide, you can go to my company website. I will show you later. And CFA and Python. So one strong trend about Python, you can apply Python, is about alternative data. So this is something that I work here a lot. Alternative data is some market source. This in the Q&A. So alternative data source can actually make sure that you are able to predict the market before the financial result is released. So there's a lot different kind of alternative data. For example, online search. When the company search a lot, there's a lot of search in the company. It means that actually a lot of people are focusing and also concentrating on that company. So that's why this alternative data is very important in finance world, especially in Malaysia. Okay, so if you want to have more resources, you can come over to our website, optimus.com resource under Python workshop, which I delivered for CFA last year, CFA Malaysia last year. And upcoming, we have algorithmic trading with multi-charts. You can go to event 212, just a little bit of promotion. Okay, overall, if you have any question, you can submit a question here, and I will pass the floor back to the MC.
Thank you very much. Ladies and gentlemen, a big round of applause for Charlie Yuan. Ladies and gentlemen, thank you so much for joining us here this afternoon. And